This is Rod Kusin Spooman for Risk, doing a recap of our trading activity for October 25th, 2016. The morning gave us a live video, and so this is a recap of the rest of the day in respect to the use of our premium threshold indicator, which is being plotted on the 20-second chart. And we're also charting the Ticky and the YM premium as well, all on the same chart, which is really helpful to address issues wherein there may be just a little bit of exceptional discretion being used for anticipating how the market's going to behave. So let's get started. We had already discussed after the market had dropped how the market would be moving down to the first standard deviation level from the initial balance. And that first standard deviation level just so happens to be right where this magenta colored line is at 37.25. So it certainly made it down there, a nice home run as we speak of it. But then notice what happens. So we're going to pick it up from these two low pivots. So what we want to do is look at the premium as it moves down to these levels and at the pivot point where there is a divergence. And you can see very clearly on the ES as well as on the Ticky that we have a divergence there in the Ticky. And not so much, however, on the YM. The YM is not divergent, and just a couple of bars later, the YM drops even further, implying and predicting a return back down to the price associated with that bar, which, as we can see, it ultimately does over here. So as we go up, on the other hand, we get this nice high bar on the ES premium. So that indicates that we're going to continue to move up until we get divergent, which we do right here at the top. So that was easy to see. So as the market moves down, we come into this low, and on the very next bar, we get divergent again on the ES as well as on the premium. Premium has a real nice oversold condition there on the Ticky, but the YM is not so happy. There is no divergence on the YM, and we've got this fairly significant low right there on this particular bar at 88 on the premium, and that doesn't quit either. We'll talk more about that just a little bit later. Nevertheless, there's enough divergence there, and the market begins to move higher. Now, be aware that the initial balance, the low of the initial balance was at 21.40. So that is somewhat of a goal. If the market's going to rally, it's going to try to rally at least up to that initial balance level. And we see that happening. The market comes up, and we get divergent over here. Not enough to keep us moving up. But at that time, you can see that the YM premium makes a nice spike up here. Nice spike up. Look at that particular bar. But we get an equal bar on the YM on the very next 20-second bar, and we're back into a divergence situation, and down we come again. But the market manages to get back up and moves right in to the descending low value area. You can see the divergence on the premium here, on the Ticky here, on the YM premium as well, and this comes right back down and hits this projected standard deviation line from the initial balance, right back to 37.25. Now, all that's very easily tradable, and very easy to see opportunities to execute several successful trades in here. But once again, we get divergent. This time the YM is very significantly divergent at that low. You can see it moving up from a low of negative 88 to 84, and the ticky is also significantly divergent. We were down at 16 at recent pivot, and now we're up at negative 2, negative 16 here to negative 2. So a lot of buying there in the Dow, and we're also divergent, as you can see, on the ES. So up we go again. Now let's just take us up to the top, so we don't bore you with all of the details. But as we go up, we should be seeing higher highs on the premium feeds on the ticky as well. And so you can see from this level here, as we begin to move higher, we are moving higher on the premium as we should be. We get a nice spike up there, but a little divergent here. The market comes down. It fights that. We're divergent at the low here, and we move back up. And that higher high on the ES premium, as well as the ticky, let's see where that was at. Looks like it's at about 18. No, it's at all the way up to a 20 there, and it drops back down. It's divergent. And then we finally come up to this high at 40.75. So we're right back into the initial balance low, and we're divergent. Or are we? Look at this closely. The ES premium is at 575. Now the previous bar was up here. So yes, we have a divergence here. But we are nevertheless a little higher than the previous pivot point here. And really that's a fairly significant higher level on the premium. Going from negative 597 up to negative 575, and that's the highest pivot that there has been. That can be read as potentially predictive that we're going to be moving back up to that price until we get another more significant drop in the premium. So even though we have a drop in the ES, the trader needed to be cognizant of how high the premium has now moved. Okay, so it's been stepping up. There's no divergence there to speak of other than compared with this last bar. The pivot bar here is at 597. Here we are at 575. So that's you got to be cautious about that. So if you took a short at that point, it would be wise, very wise, to carry a tight protective stop. And if you see the market moving up or divergent, as you surely do see moments thereafter, you'd have to be concerned with that. But as it turns out, this market begins to drop, and so you're in a fairly safe situation. And if there was any real concern here, your biggest concern would come as a result of this move up on the premium to 16. Now, that's not on the ticky to 16. That's not a particularly high reading, all things considered. Okay. So let's move this forward a bit. Oh, and I should mention this drop in the premium at this particular pivot. If you just look at how this market is behaving, in particular from the pivot here, we were at 665 at this point, and now we're at negative 682. That's a fairly significant drop at a higher low on the ES. So that's very predictive that this market is going to continue to move down. And as it does, you see what happens right in here. It moves down once again. Nice drop right in here, and I'm not showing you any more than I need to just to make the point. But that big low on the premium right there is being confirmed not only on the ticky but on the YM premium as well. We have dropped once again, fairly significantly. So the little bounce that takes place thereafter is just another wonderful opportunity to short this. Okay, and now you've got your pivot bar right there, and a drop in the premium once again, drop in the ticky, drop even in the YM premium just a little bit before there. A little test of that, and still another drop. So as we come down, all right, as we come down, we break below that initial projected standard deviation level at 3725. And at this point, it's good to be watching carefully what the other premium feeds, what the initial balance is telling us as well. And we'll quickly just show this to you. We'll just bring this up. We come down here, and you'll notice that at this particular moment, as we're dropping lower, the VIX, which is the only feed that goes into the second standard deviation line, has now penetrated that and is becoming divergent itself. So nobody else made it down that far. The VIX made it up, and that's just the way it goes. Sometimes if the VIX hits it first, or if the IND hits it first, or if the INX hits it first, or if the YM hits it before the ES, any one of those things can cause this market to move up. Okay. Now, as we drop through that level, okay, now watch very carefully what's happening with the premium. We get this significant low on the premium here, and the very next bar is nicely divergent once again, and it's divergent on the ES premium. It's divergent on the ticky. It's divergent on the YM. All these are divergent. Is it any wonder that this begins to move up once again? And as it does, we get this nice spike up, another good size spike up on the premium. That's a fairly good indication, both on the YM as well as the ES, that this market is going to continue to move back up. And up it does, until we make it to 39.25. And then once again, we're, as you can see, all of our indicators, premium in the ticky, premium on both feeds, is showing a divergence right there. So, good reason, at this point in time, to look at, taking a short. That's what the premium is telling you to do. Now, as that happens, okay, as we move down here into this low, right in here, you'll notice how the once again the premium is divergent compared to the previous bar, but it's not real divergent. There's not a real significant divergence there, but there is one. The ticky, however, is flat, still at 18. YM is moving up. So, guess what happens? This market begins to move back again. But it loses the strength. It becomes divergent there. It drops, but no sooner than it drops, it comes down to this point, and now we're at sort of a stalemate. We're not really divergent. And just look at this bar. We are at a lower level on the premium here. We're at a lower level. Okay? Ticky is not telling us anything, nor is the YM. So now what we have to be concerned with is that if this moves back up, we have actually on the ES premium a basis for anticipating a return back to the standard deviation level at 37.25, first standard deviation on the IB, because that's all practical purposes that's divergent in the wrong way, because we're moving down. We're at 646, pardon me, at 648 here, and then as we move down here, we're way down at 661. That's not good. And if we do get a rally back up, we've got a very strong reason to short that thing. Well, just to take us right up to where we need to be. As the market moves up, we get this very strong bar on all levels. YM premium hasn't made it up too high. Okay, we're not quite as high as we'd like to be there. But as we move up to this pivot, we're at 39.50 now. Keep in mind, the initial balance is right at 21.40. So we're just a little bit below there. Just a little bit below. But now the ticky moves up. And in just a couple of bars, we get a significant bar moving up. In fact, the highest level on the YM since the last hour. So this market is still moving up. We get a little pullback, and that's okay. But you see how we're divergent right at that particular low. Want to take advantage of that, and if not long, this thing is indicating that it's going back up, and back up it does. Now we're still moving up. Look at the numbers here: 75, 76, 73. Okay, and over here, this is significant because this, as much as it is not that much higher here, is still higher. So we're at 39.50 and we're still moving higher. And this bar on the ticky has moved up, but we're divergent on the next bar. We're divergent on the YM as well. So this may come down a little bit, but we're still moving up according to the ES. And here we go again. We're not getting lower lows. We're getting higher lows. Now it's getting to be a little bit more of a question. Because as we come to this particular point here, we're into 1244. We're now divergent. We have a negative divergence on the premium, on the ticky. But traders like that initial balance level. They really do. They like that. And we haven't had it there. So if we were to take a short, as the premium is now suggesting, got to be aware that this thing, you know, has the potential of moving right up there to that 2140 area, maybe even a little higher. We just have to see. So how are we going to know whether that's going to happen? Let's suppose that we went ahead and shorted that because we got divergence here, and we need to believe the premium. Watch the lows. Now, you see what's happened here on the ES. The lows have not really gone lower. The ticky has not really gone lower at this point. In fact, it's moved a bit higher. Because look at this low here. 18, 16, 14, and then 14 again here on the pivot bar. But the YM, particularly here, and then here, has stepped up. And we're moving right down into this point of control on the YM. That's a good place for this to rally up. So what happens? We get all the way up to 40. It's right there to 40, and on that bar, what do you see happening? Before we even show you the whole bar, you can see we're divergent. Now, as it turns out, she moves up 3 more ticks. But you were divergent there, and with all due respect, that's a good place to have shorted the market. Now, what would need to happen for this to continue to move down is we need to be getting new lows. And just as you're about to realize it, you see that we're getting higher lows and higher lows on all of the rest of the data feeds. This isn't over yet. And it's very clear, the premium is very, very clear about what it's telling you. This is moving higher. So you have to take appropriate action on a short trade there to make sure that you don't get yourself in a lot of trouble. So we see what happens here, and the market moves up, takes us all the way to 40.75 at the top there. Now, right before it does, we get another nice move up on the YM, move up on the ticky, move up on the ES premium, and then we get divergent. Very next bar. So we, at best, we want to average in to the short because it's given us some divergence there. It's very clear. It's giving us some divergence. But now you've got to watch the lows. The lows have to start moving lower. Is that happening? Yes. Now it is. That's what we expect. And it's got to continue to move down. But notice what is happening here. See how the lows are stepping up? They're stepping up here, and they're stepping up here. So this may not be over. So once again, we take a very cautious position up here. If we've shorted it, we may want to ease out of that position a little bit, maintain our best fill in here, because this thing looks like it may go up again. And there, it's starting to do that very thing. See how the lows are responding? Higher lows, higher lows. And we move right back up to 40.75. Now, if this is a good place to maintain our short, the premium now really needs to be at a lower level. Certainly not a higher level. So let's take a real close look. We're going to move this back because we can see what's happening here. So we were at 582 here. We're at 581. Okay, now that's just a little bit higher. Likely not a big concern. The YM was at 79, it's now at 81. And compared to the last bar, the ticky is now divergent. And we are, incidentally, we're just a little bit divergent actually on the ES premium, because it previously was at a high of 579 and now we're down to 581, just like it was here. Okay, that was at 575. So the next time we are divergent on the first bar and on the second bar as well. It's not quite over yet. It makes one more attempt. But at this point, now you can see how the premium has really dropped. And if you hadn't shorted it here, now you get every reason to short it there. Big drops in the premium as well as on the ticky there, and dropping down to 81 on the YM. So down we go again. Big drop here on the premium. We're going to continue to move down. Lower low again here. Now at the pivot point there, higher low, comes up a little bit, tags that price. You can see the divergence, same price here compared to here, but big drop on the premium. Our indicator shows you that, and down we go. Okay, and now we're right back into that area. We've dropped actually below it. We're now at this point of support right in here at 36.25. But the premium is still dropping fairly significantly, so that's going to get tested. And it does, and when we get it tested again, we're even lower once again. So we're not over. It's going to continue to move down. So that's how we can read this. It's not that difficult. It is far better. It's far better than reading an oscillator or a lagging stochastic. You know exactly how the market should be behaving when you understand how to read the premium. And whether you're reading the premium on the ES, the ticky, the premium on the YM, they're all very compelling. And you just got to learn how to do this. Now, we've heard that some people say, oh, you know, there's no leading indicator out there. Well, that's just full of baloney. The only reason they don't know that there is a leading indicator out there is because they don't know how to read this thing. You know how to read it. You most certainly do have a leading indicator. No question about it. No question about it. So, if you're already interested, we invite you to come and take a demo. We'll be happy to spend some time with you to show you the value of having this indicator in your battery of tools. Because once you learn how to use it, you're going to be dumping a lot of unnecessary and ineffective indicators for trading this market, and more than likely you're just going to dump them all together in favor of the premium. So there's no better indicator out there. There just simply isn't. Now, we challenge you, take the time to learn how to read it. We'll help you, and we're doing it for an extraordinarily low cost. $750 for this, for really all three of our indicators here. We'll make that offer to you at this time. And then if you need some personal tutoring, we're going to charge you for our time, but within a very short period of time, you should be able to learn, how to read this. It's not that difficult, not really. So that's our offer, and we look forward to hearing from all of you out there that have seen this video. I'm Rod Kusin, Spoon Man for Risk.